Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my low time frame bullish scenario, where we're looking for an expanding flat ABC, which means we're still looking for more upside in an WXY scenario inside of the green wave B. This wave Y then has to be a three-wave structure to the upside, with the most common target area of B and Y being intertwined between 31.9k and 32.4k, which is very close to the 2022 range highs, so there may be a liquidity grab and then a move towards the downside. The main problem with this scenario at the moment is time, because price over here has passed the 1-to-1 fib time taken from the high to the low of wave A, which means you're comparing the time it took to develop wave A with the current time that it takes to develop this wave B. Usually waves have about a 1-to-1 relationship. I always say the 1.618 is fine for me as well. Especially a wave B can be very long, so even though we might get closer to the 1.618, nothing is invalidated, but I do like to see price move to the upside to get close to this area. If price is going to range here the whole day again, then another scenario becomes more probable for the potential bullish scenario. If we then look at the bearish scenario, we're not expecting that move to the upside. Instead, we are going towards the downside in an WXY scenario. So we have a three-wave W, three-wave X, and we're going to be looking for a three-wave Y to the downside, where the most common target for wave Y is between the 1 and the 1.236, which is between 29.3k and 28.9k, which also includes this blue support area that we have between 28.8k and 29.1k, which is very interesting. So that's some nice confluence around 29k. We also then fill this wick over here, and we then have also a little bit of a low. I call it lows because we also have this low, but I can't really call it a double bottom, because then I would prefer this low to be a little bit deeper and form something like this. Then you have low number 1, low number 2 for a double bottom. I just call it lows for now. And in this particular scenario, we then first preferably want to see this box over here being tested as resistance, which is a resistance area between 30.5k and 30.7k, where price is ranging right now. So in this scenario, we then have a first structure in a wave W, followed then by a range, which then is a wave X, before then eventually we get a wave Y to the downside, which then again is a three-wave structure. So you want to see a three-wave move to the downside. If price is going to move to the downside impulsively, then this over here is not an area of interest, and we have to look for other scenarios, which I have, but at the moment are less probable. If we then zoom into the low time frame, the micro time frame, we were looking for a triangle double fake out scenario. I love this type of stuff because if you pull trend lines over here, the first thing you saw yesterday was a triangle. And I don't really like triangles usually, because very often the rules are not respected. And in this triangle, this move over here was not a zigzag, while 4 out of the 5 moves have to be a zigzag. And if one is not a zigzag, it is usually either a wave C or a wave D, but never the first wave. So in this scenario, this looked more like an impulsive structure. So I was looking for an ABC zigzag type of move, where we then first fake out the triangle, the upper trend line, to the upside, before then faking it out to the downside, before then eventually moving to the upside again. And if I remove the trend line, you can see that price faked out to the upside first. It took a lower high, it took this high, it didn't go all the way here, I mean it did now of course, but yesterday it took this high over here for then a move to the downside, took the double lows that we were looking for as well, and it bounced right on top of the time naked point of control that I mentioned in my video yesterday as well. So this was actually quite nice indeed for then this move towards the upside. And now we are patient. Well, we are patient. We had the idea of a fake out up, fake out down, and then continuation to the upside. Now we are patient and we wait and see if price can make it to the target box at the highs between 30.5k and 30.7k. In the more bullish scenario, that is then also what you want to see. So then we have a three wave in a W over here, followed then by an ABC and then a wave X, for then a three-wave structure in a wave Y. So again, it's not a straight line to the upside. It's going to be then a 3-wave structure to the upside for wave Y, where the most common target for this wave Y is between the 0.618 and the 1.236, which is a big area, but the most importantly, it includes that blue target box for resistance. So that's very, very interesting. And we also have still a double top at 30.5k. And this is a nice one because you have high number 1, high number 2, that's a little bit lower. So price could then move to the upside, take the double top while hitting this area as well. A little bit of an order block over here on the 30 minute. This is the 15, but on the 30. So that is very, very nice. Now in this scenario, if we go to the fib, we also had the 1-to-1 fib being hit over here. So this one is then taken from the high to the low of A to this high, particularly over here. And then the 1-to-1 was hit, which is a target for wave C. And that could then be the end of a wave X for then continuation to the upside. I do have to say that it is quite shallow, and over here I can count this as an ABC expanding flat. So that's why I also have a micro bearish scenario, which I show you in a second, because this can then still be potentially a 5. Then you still have this as a 3, 5, and then continuation. So that is then also the bearish scenario where we still expect a move to the downside. Now preferably, I mean, we took the double lows over here as well. We took the liquidity, bounced on the time naked point of control, so continuation would be nice, but again, patience and show what let price show us what it wants to do. But the alternative here is then a wave A. This is still a wave B before then a wave C, because if I pull a fib from the low to this high over here and I put it on the expanding flat targets, then you can see that the most common target for a wave B in an expanding flat, which is between the 1.38 and the 1.236, has been incredibly well respected. So that is why that is definitely something that we have to keep in mind. If price is coming down once more, because we do have, there we go again, a double bottom, low number 1, low number 2. So again, maybe liquidity grab, finish this structure, and then an ABC, and then a move towards the upside. That could be very, very interesting indeed. And it all depends on how price is going to move in the upcoming hours. And then at 1 p.m., of course, I will have another video, Central East European time. And you can also see that the most common target area for a wave C includes the double bottom. So that is why this is very interesting in then a 5-3-5. The main reason I've been thinking about this is, first of all, if this is an impulse to the downside, it's a bit of an odd one because you have a 1, 2, 3, 4, and then a very long 5. And if we zoom in, then one can argue this wave 3 over here is at least not the potential shortest wave, because you have to take a trend-based fib from the high to the low to then the high of wave 1, and you can see that the 1-to-1 has been crossed with a couple of wicks, right? So wave 3 is in an impulse, never allowed to be the shortest wave. And then wave 5 over here, that is then the extended structure, and then a 1, 2, 3, 4, and then we have a 5-wave move to the downside. It's not the nicest impulse, but you can like force an impulse out of it. So that is why this scenario, and then a 5, then you have a 3, 5 might be giving us a better structure to the downside. This over here is a very clear impulse on the lower time frames. This one a little bit less clear, and extended wave 5 is also a bit more rare. So maybe we're going to get a better impulse to the downside over here. If you then look at the CVD divergences, sure, there was a lot going on right yesterday where the more local CVD divergences, this one over here, have played out because it took the high. Now, all of these bearish ones also played out. Bearish CVD divergence, target taken. Bearish CVD, target taken. Very nice. The bullish one, target also taken. Now, this one, interestingly, is invalidated. So from this low to higher lows, this low has now been taken without the target being taken first. So we can remove that one because it has been taken. Also, this one has been played out. So, this is all nice and good. And we still have basically 2 CVD divergences left. We have the one from this low to the higher low where the target is this high, and we also have from the complete low to the higher low where again the target is this high, which has not yet been taken at 34.50. So that is going to be the next target for price, and the moment price is going to take this high, then all the bullish divergences we have played out. And on the AGGR chart, it looks like this, where if we zoom out, you can see higher low on price, also here higher low on price, but look at the blue line over here, lower lows on the blue line, from these highs or lows over here on price. So higher low on price, lower low on the CVD. That is a bullish CVD divergence. And if we look more locally at what is happening at the moment of recording, then we can also see some bullish CVD divergences on the 5-minute, higher low on price over here, lower low on the yellow CVD, which is very nice for a bullish CVD divergence, where then the target, however, is going to be this high over here. So the moment this little high has been taken, that is the moment this CVD has played out. And sometimes you can see AGGR is twitching because price is here and not there. So if we then finally look at the probabilities, then I zoom out of the different scenarios, and then preferably on the low time frame, I would be looking for the more bearish scenario, where we're going to be ranging for the rest of the weekend in a wave X, before then a move to the downside for wave Y, where we're then going to be looking at 29K and observe what price is going to do there. And on the micro scenario, my preferred scenario really after the double fake out triangle that we had yesterday would be continuation, because we had a double, as you can see over here, a double bottom that has been taken. We first took the high, fake out up, fake out down. Continuation would now be my preferred scenario, and we wait and see what price is going to do in the first couple of hours of this Sunday morning for me in the Central East European time zone. And then at 1 p.m. I will make sure to provide you with a new update. So I hope this video was helpful or valuable to you. Please check out the most educational video, or the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.